Good morning, everybody, and this is your S&P 500 day trade setups for today. So if you were following on the Telegram channel yesterday, you saw that I did get out of the long that we had, and pretty much we started going sideways. So that trade is over, and as far as I'm concerned at the moment, we need to wait for the Feds now. So you can see already we've had a bit of an exhaustion bar up to try and close above the previous high. We haven't really closed above it. We've just got three tails that have rejected the top at the moment. So if we start moving down, and I think the thing that you need to worry about at the moment is the Feds are definitely going to start tapering. They've been threatening it for 2 months. So today what you're expecting from them is that the plan of action, and the plan of action is more than likely going to include rate hikes. So that typically just gives us a little bit of turmoil, should give us some kind of sideways or downward move, and then some consolidation for it to move again. So right now, those are the three levels that we're watching, and we'll get to those on the hour. So first one, which is pretty much where we took profit yesterday, which is 46.29, and you can see a whole lot of chaos around there. Did go past, did try find support, and we did close just above it, but after hours looks like we're coming back down. I suspect after hours we're going to probably come back onto this trend line here, somewhere at 46.25, 46.25, 46.24, somewhere around that area, and then form some form of consolidation. And typically what you normally see with whenever the FOMC meeting is happening, you typically have some form of a triangle, and there was one starting last night. So that's kind of the structure that I see at the moment. What I do want to do is just check the 15-minute for any smaller gaps to the downside. There's one right the way down here, and there's another one there, and it doesn't look like there's anything. Oh, there's another one right at the bottom. So quite a few gaps. You can see bar closed on its low there, and then gapped up to open here and then move. So those are gaps. I don't worry about the tails. The tails, in my experience in back testing, tails mean nothing. It's where the bar closed when you're looking at gaps. So those are gaps all the way down, and obviously we've got a trend line for trend line support. Got a little bit of divergence brewing at the moment, but I think this is kind of what you're looking at today. Doubt you'll get above 46.35, and you probably won't get below 46.29, 46.25. So 46.25 to the downside and 46.35 to the upside. So I think that's kind of the range for this morning session. If Europe has a pretty good start, then you'll probably have a big jump up, but then you'll come back into the structure while we wait for the Feds. If Europe has some kind of a disaster, then it'll probably just slide until the Feds come out. This level down here is fairly interesting, which is 46.18 area. You can see, and that's pretty interesting. This double bottom that we had here, more than likely done. Yep, profit is done. So yeah, all in all, I think we need to be cautious and just wait for this one, wait for the news to come out, or the noise to come out, and then we should be able to find some direction. I suspect if it does pull back, it's going to find structure somewhere. It's just going to offer a better opportunity to buy. If it does break, I'd be looking for a retest. I'm not really wanting to chase the break. So this is a situation of just be calm and wait for it to play out before you start jumping into it. Okay, anyway, that's kind of my view at the moment. Money in the pocket till the FOMC release their statement, and then we'll look at it, which is fairly late in the evening for me. So 9 times out of 10, I'll probably just ignore it and pick it up again tomorrow morning. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.